You know what drives me nuts? Watching people park their hard-earned cash in safe index funds while the real money is being made in places they aren't even looking. Last week, I was watching the S&P hit another record high, and all I could think was, this is exactly when most investors get blindsided. Here's the thing. September is historically the worst month for stocks. And when the market shakes, it doesn't care how many records it broke last week. But that's where the opportunity is hiding, in the plays that don't just survive the shakeout, they explode through it. Today, I'm going to walk you through 3 hyper-growth stocks that I believe can double your money by 2027, even if the market stalls or corrects. I've put my own time, research, and in some cases, my own money into understanding why these companies have the kind of catalysts that Wall Street can't ignore. I'm not talking about bloated mega caps everyone already owns. I'm talking about hungry, agile disruptors sitting on billion-dollar tailwinds. Stocks most people won't touch until they've already doubled. And trust me, by the time they notice, it'll be too late for them, but not for you. So grab your notepad, because by the end of this, you'll know exactly which tickers could be your portfolio's jet fuel for the next 3 years. Let's break down why now is such a critical window. Since April's panic lows, the S&P has ripped 22% higher, driven mostly by AI mania and hope that the Federal Reserve will eventually loosen monetary policy. But elite traders don't chase moves after they've happened. They anticipate the pullbacks before the crowd even thinks about them. Historically, September delivers an average return of negative 1.3% since 1990, and October's volatility is nearly 40% higher than the yearly average. That means institutional money is already repositioning, rotating into growth stocks that are built for offense, not defense. And when I say offense, I mean companies with binary catalysts. Major product launches, AI monetization, or regulatory tailwinds that can move the needle fast. The 3 stocks I'm about to walk you through fit that profile perfectly. Each has a realistic path to 100% upside within 2 to 3 years thanks to strong revenue growth, massive total addressable markets, and margin expansion that will make Wall Street take notice. Starting with Rocket Lab, ticker RKLB. This is not just another space stock. This is a vertical monopoly in a $1.4 trillion space economy. While everyone on Twitter is busy debating SpaceX's next move, Rocket Lab is already executing on contracts, launches, and revenue growth. Here's why I believe it could double. First catalyst, the Neutron rocket debut in Q1 2026. This rocket can carry payloads up to 13 tons, which is 8 times more than their current Electron model. That immediately puts them in the running for over $5 billion in Department of Defense and NASA contracts. Business SpaceX has been dominating until now. Second catalyst, space systems. Rocket Lab generates about 80% of its revenue from satellites and on-orbit services. These are recurring, high-margin segments. They've also recently launched a hypersonics division aimed at Pentagon contracts. Hypersonics is one of the hottest areas of defense spending right now, and Rocket Lab is positioning itself early. Financially, they're set to grow revenue from $577 million in 2024 to $1.1 billion in 2026, with gross margins climbing from 18% to 35%. Right now, the stock trades at just $5.80, which is 12 times 2026 sales, half of SpaceX's multiple. My price target, $12 or more by 2027. It's volatile, yes, but for investors who understand asymmetric upside, it's exactly the kind of risk you want to take. Next, AMD, Advanced Micro Devices. Everyone knows Nvidia is the big dog in AI, sitting on a $4 trillion valuation. But cracks in that dominance are forming, and AMD is sliding right into the gaps. They're not aiming for second place. They're carving out a $30 billion AI niche with a market cap 5 times smaller than Nvidia's. Catalyst number 1, the MI350X chip. This thing is a beast. 35% faster inference speeds than Nvidia's H100, and it costs 20% less. It's already been adopted by Meta, Microsoft, and Oracle. That adoption could push AI GPU revenue from $4 billion in 2024 to over $20 billion by 2027. Catalyst number 2, embedded and custom silicon. Think Tesla's Dojo supercomputer deal, plus the integration of Xilinx tech to dominate industrial LOT markets. This gives AMD a foothold in multiple high-growth verticals at once. From a numbers perspective, AMD's revenue is set to grow from $26.3 billion in 2024 to $40.5 billion in 2026. Data center revenue will jump from 38% to over 50% of total sales. Earnings per share growth? Around 45% annually. And at 30 times forward earnings, AMD is significantly cheaper than Nvidia's 70x. My price target? $400, up from $180 today. Lisa Su has a proven track record of turning laggards into market leaders. You don't want to bet against her. Third, Okta, ticker OKTA. The old way of thinking about cybersecurity was building bigger walls. In the AI era, identity is the moat, and Okta owns the keys. They have over 18,500 enterprise clients, including 85% of the Fortune 500, and they are deeply embedded in corporate infrastructure. Catalyst number 1, the AI security surge. Upcoming SEC Rule 2025 will make identity verification mandatory for large language models. That's a $12 billion incremental market that Okta is already positioned to dominate. On top of that, passwordless login adoption is set to rise from 20% today to 70% by 2027. Catalyst number 2, profitability. Okta has hit record free cash flow margins of 34%, with projections showing 40% or more by 2026 as enterprise contracts stack up. They're expected to grow revenue from $2.6 billion in 2024 to $3.7 billion in 2026, while EBITDA margins nearly double from 15% to 28%. At a $17 billion market cap, Okta is also a prime acquisition target for Cisco or Palo Alto networks. My price target? $180, double today's $90. With a PEG ratio of just 1.5%, its growth is at a value price. Let's talk portfolio strategy. Rocket Lab gets a 5 to 10% allocation, ideally on dips below $5. AMD is a core holding, 15% of the portfolio, with cash secured puts on earnings dips to boost returns. Okta gets a 10% allocation, with free cash flow as the built-in safety net. For entry points, watch for Rocket Lab's Neutron test flight confirmation in late 2025, AMD's MI350X mass shipment data in early 2026, and Okta's lift from the federal cybersecurity mandate. Remember, September weakness is not a warning. It's an invitation. These companies don't need a roaring bull market to deliver. They just need to execute. And all three are doing exactly that. If there's one takeaway here, it's this. AI, space, and cybersecurity are the triple engines of the next bull run. The leaders in these sectors will not only survive downturns, they'll compound through them. Drop your top pick in the comments, Rocket Lab, AMD, or Okta, and tell me why. I read every single one. And if you haven't already, hit that subscribe button and turn on notifications. Until next time, trade sharp, stay ruthless, and keep chasing alpha with the Elite Trade Club.